The unrest in the Middle East could lead to bigger profits for Russia's oil and natural gas industries. Russia pumps out more oil than Saudi Arabia. The ruble, Russian stocks have been rising as energy prices have been surging. For more on the energy play in Russia, we're joined by John Connor. He's founder and portfolio manager of the Millennium Russia Fund, which is up 24% from this time last year. Welcome back to InBusiness, John.
Thank you, Margaret.
Well, I want to start first, though, before we get to oil, on the question of Japan. One of the bets seems to be that Japan's going to have to look elsewhere for energy supply, away from its nuclear industry, and perhaps towards liquefied natural gas. Is Russia a beneficiary of that?
Certainly, and they're opening now with aim towards China, actually, but gas is hardwired, but LNG can be transported. The Kvitka field, which is a huge field in East Siberia, which, they're going to tap more into the Chinese market, but now they can, they're already exporting oil from the Far East Coast, Sakhalin Island and so forth. They're the biggest exporter of energy in the world.
Mm-hmm. Is there a company that perhaps we don't know the name of that we should have our eye on?
Yes, Gazprom.
Well, we know that name.
Yeah.
we know that name.
Gazprom's become a hot stock again and is doing very well. Novatech is, all the oil companies actually are now being allowed to put their gas into the pipeline for export. Mm-hmm. That's a recent innovation. Mostly they've been flaring it. If you saw the satellite photos of Siberia, you'd see these huge flares from gas that was being wasted previously. It's now going to be put to use.
Well, away from gas and towards oil, which is what we're showing on our screen there, we're looking at oil in the United States at $100 a barrel. Brent crude has been around those prices for some time. We did have Russia's finance minister say today they can balance their budget if we hit $115 a barrel. Short of that target, what does that mean for your outlook for the country?
Well, on the macro side, Russia had gone into fiscal deficit because it's an election year and they've been spending more in the population programs for housing and education and health. But, they take so much from the barrel price that, yes, the fiscal implications are very positive for the economy, which it looks like this year will be growing 5 or 6%, not 4%, which had been thought. So 6% for Russia is huge. I mean, that just puts the economy into overdrive.
And that's juiced by this recent climate energy prices.
Yes. And other exports, too. Actually, all the exports are doing well. Potash, fertilizer, iron ore, steel, coking coal, steel. Everything Russia has to sell has had a nice price increase. So
as long as global growth continues, they'll benefit from that. We are a year out, I think it is, from, as you said, those elections, parliamentary and presidential.
Parliamentary in December, presidential next March.
So is there an element of political risk here, or do we sort of tongue-in-cheek already know the outcome?
Well, there are 4 major parties. People can vote for anybody they want. I think Russia's a free market democracy. They get free TV time. You have to listen to Zhuganov, the communists, ad nauseum. But we like to say it's a managed democracy. Russians gravitate towards the party of power. They've always done that. But the other parties, there are 3 of them that get around 10% in the polls. So, the United Russia is not going to be getting 98% of the vote by any means.
What might change, if anything, in terms of the investment climate? I mean, we saw, BP put in nearly $8 billion into Rosneft, that deal. Do we see more interaction with multinationals in doing well inside of Russia?
Well, in terms
in
terms of foreign direct investment, I think the major companies consider Russia a pretty stable place now. And given the Middle East and so forth, I think investors,
it's a relative scale.
I think investors should also consider Russia more stable. It gets a big discount relative to the other BRIC countries. India and Brazil around 11, 13, China 20. The Russian multiple has moved up from 7 to 8, but it's still pretty discounted compared to the others.
But a big part of that is also the fact that they're not OPEC members, right? So they can turn on the spigots when they need to.
Well, actually, their ability to increase output is very limited.
Is it?
But they do benefit from the price rises.
Mm-hmm. So what is it that you find the easiest play here? I mean, is it, as you said, some of the mining stocks, or are you looking towards a consumer growth? question.
Actually, my favorite stock right now is Magnit, which has 4,000 stores. It's the leading retailer in Russia. They're going to double it to 8,000 by 2020. They do focus on the smaller, under 500,000 population centers. So it's more of the convenience store, although they have started supermarkets. But most Russians still walk to the corner or the neighborhood store and do $10 purchases 3 times a week. And that's the market right now. It will change over time. There'll be more roll-ups and consolidation. Right now, the top 10 retailers only have about 10% of total retail.
And you say this is a huge cash economy. So
yes, huge cash economy.
It's hard to handicap. But the name of that company again, Magnit.
MGNT.
It's spelled like magnet.
Yeah, right. It's a GDR. And Margaret, I just want to mention we're putting up a blog called Russia Taking Stock, so people have a chance to dialogue about these leading companies and the economy in general.
All right, we'll check it out. Thank you very much, John.
Thank you,
Good
Margaret.
talking to you.
Nice to talk to you.